Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for Super Microcomputer Incorporated, stock ticker SMCI. So as we can see here, we're going to take a little bit of a different view on this stock. If you've been watching my videos, for the most part, you would know that we've been focusing more on this this more recent trend movement here, which has been seen mostly in the sideways direction. We've sort of been drilling down into these areas here for the most part. And there are some important reasons for that, but we've seen some fairly substantial price moves lower at this point, and some key support zones have been removed in the process. So at this point, I think that it's important to kind of take a step back here and try to look at the broader viewpoint, so that we can kind of assess where we are currently within the historical context, so to speak. So, here we have the what I've outlined here is the dominant price move. So the way that I'm kind of defining this would be seen for it's mostly the rally that occurred from the beginning of this year. So if we're looking at roughly January 18, we can see that the stock was trading at lows closer to $300 per share, roughly 305, 306. And then we can kind of extend that upward in this direction here, all the way to these all-time highs here, which posted at 1229. So, this was a very significant price move in a short period of time. And it does stand to reason here that we would need to see a period of consolidation, a bit of a downside pullback, and then a period of consolidation before we're able to make the next major trending move. So currently, the real question that we have to be asking ourselves is, has this rally completed itself? Has the paradigm shifted? Are we ready to start reversing lower? So these are all important questions that need to be answered, especially when you're dealing with a stock like this. So, as we can see here, I've outlined a couple of potential support zones that have started to develop. Because with all of this downside trading activity, we have already removed some fairly significant price zones. So if we're looking at this prior sort of yearly upward trending move as the dominant price zone, we can see that we've already broken through several Fibonacci retracement levels. This red zone up here would be the 23.6% Fibonacci retracement. So that would really culminate with this darker red line here. I guess it's a lighter red line. So here would be the 23.6% Fib retracement, followed by the 38.2% Fib retracement, and then the 50% retracement. And as we can see, we've broken through all of those quite clearly, but we have not yet forcefully broken through this line here, the sort of teal or dark light green line here, which would be the 618 Fibonacci retracement. So we can sort of point to a couple of these areas here to sort of emphasize what has actually gone on. So as we can see, for the most part, when we tested this level initially, we did see a fair bounce here. Ultimately, we did come into price highs that were back above the $1,000 mark, trading just below $1,015. But then this area here did start to form a very formidable resistance zone, which did contain prices, and then send the stock lower once again. So, more recently, we've broken shorter term support levels just above 770, and then again just above 740. So this really does call this prior region back into focus here. I think this chart here makes it fairly clear that we are trading back at a critical support zone now. Overall, we can see that the broader trajectory in the relative strength index, that would be the indicator reading at the bottom of the chart here, we can see that there continues to be a condition that would be defined by negative momentum levels. However, what we can point to, in light of that, is the fact that we are now trading in oversold territory. The relative strength index moves on a scale from 0 to 100. Anything below 30 would be considered to be oversold. So as we can see here, we have fallen below that level. Currently, we're trading just below 23 in the relative strength index. So that is a fairly strong oversold. It's a fairly strong oversold reading. What this does suggest here is that we're going to need to see some sort of period of upward retracement, or at the very least, a period of sideways consolidation. So, in order for one of those situations to occur, we would then start to see we would then start to see the relative strength index start to bottom out and roll over. Could that happen near current levels? The fact is, we are trading at a very, very important long-term support zone here. This comes in at roughly 660, as we can see here. So, shorter term, if we kind of zoom in here a bit, we can see that we have had a bit of a bounce off of this 660 level. We're currently trading at 701, just above the $700 mark. And, as we're doing this, we're starting to see the moving average cluster cross over itself in the negative direction. In particular, I'm looking at this yellow line here, which has crossed through all of the exponential moving averages. That yellow line is the 20-period exponential moving average, and it has most recently crossed below the blue line here, which is the 200-period exponential moving average. This is a 4-hour chart, not a 1-hour chart. My mistake. So, but as we're seeing here, we are getting some fairly significant moving average crossovers as well. So the 20-period EMA is crossing below all of the other exponential moving averages, and this orange line here, which is the 50-period EMA, has now crossed below the 100-period EMA, which is the purple line. So, these are all crossing over each other in the bearish direction, and they are pointed to the downside. So what this does suggest here is that the stock is likely to start facing resistance at lower and lower levels. It will require a break to the top side. We will need to see a break above this moving average cluster in order to sort of reverse that condition. So overall, we do need to watch this 660 level very closely. We have currently seen a bit of a bounce out of here, but we're going to need to see a stronger reversal here in order to further validate the support zone and suggest that prices are ready to move higher. If we're looking at the relative strength index, we do have some indication that could be ready to occur. But what we really need to see here is for this relative strength index reading to start to roll over and move out of oversold territory. So here's the current market update for Super Micro Computer Incorporated, stock ticker SMCI.